Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. This session is being recorded. This is a strategic webinar, start of the week, Monday. Good night, good evening to do it, to analyze and forecast a little bit on what the possible scenarios are going forward for the remainder of the week, going into Thanksgiving, which is next week. Full disclosure, this is purely for financial education, not for any solicitation or advice. The session will be recorded, uploaded to the Clueless Day Trading Google YouTube channel for full access for all members, as well as anyone with the internet connection. Fantastic forecast and videocast, well, basically our video blogs that are available there for anyone to review and see how precise in most cases my predictions have been on the market and the possible scenarios that might unfold, which this particular scenario today was explained in absolute minute detail last week. Feel free to go look at the webinars from last week, and you will see that this particular scenario unfolding right now, which we're going to go through in this particular session, was explained very much in detail, and all members and active traders or even non-active traders should not be surprised, and in most cases were somewhat prepared, at least in pulling down positions and having a good amount in cash, which I talked about quite a bit last week, and at the same time getting prepared for the inevitable, I repeat, the inevitable reflex bounce that will ensue. And I can't give you an exact time frame, but I'd like to say within the next 24 to 72 hours. On that note, let us begin, and let me go straight into the charts. I was setting up two of the directional charts out there, which we call the Swing SPX Swing 533, and also the New York McClellan Oscillator, the NYMO. A couple of quick broad points. Today's sell-off, which the futures last night were looking fantastic. As you know, I had a family appointment, and I tweeted out as I saw the futures were doing quite nicely. They were doing quite nicely early this morning till about 6 a.m. And then things started to unravel. And during the day, there was some huge winners on particular selective positions, such as Chipotle, such as Ulta Beauty, even Etsy was up. And there were some sporadic instances of these selective trades, which especially Chipotle was just a huge winner. Took the returns right off the top when it hit $500. That was a beautiful trade. And then, of course, there was deterioration on Apple, which was a black swan event because and just so you guys are aware of it, which I did tweet out, that one of Apple's suppliers, Lumentum, L-I-T-E, on a update press release mentioned that one of their largest customers, they didn't name Apple by name, had canceled a large order. They do the laser diodes for Apple, the Retina display and the sign-on and stuff like that, right? The laser component of it, the 3D laser component of Apple iPhones. So obviously that sent a shudder through all Apple suppliers, chips and stuff included, and there was a cascade. So at this point, that was unexpected, but that's just the nature of the beast, and that caused a big negative ripple effect across the board on techs, and that started to cause some panic. And of course, the markets fell through different levels. All of them were clearly shown on multiple charts, and as we know, we had a very powerful ROI, return on investment, on the intraday puts on the SPY. Today was today's Veterans Day holiday. With all due respect, Happy Veterans Day to all veterans, and of course today was also a bond holiday. The bond market was closed and the banks were closed, so there was no settlement on funds due from Friday. And whether one talks about it or not, that was also one of the reasons why there was a lack of liquidity in the market. Keep in mind that there is a liquidity squeeze going on underneath the market, primarily because of the Fed hawkish tone about raising rates, and we don't know whether the Fed's going to raise rate in December, but still, so there is an underlying shortage of liquidity on global markets because of the very strong dollar, which pushes down, as we know, foreign currencies, emerging markets. They got to pay up more for their emerging debt and for goods that they buy in dollars. And obviously with their weaker currency and our extremely strong dollar, which is great for tourism. If you really want to see, we should all go for long holidays somewhere overseas and spend this strength of the US dollar. So that causes a global liquidity squeeze. And that also has some ramifications coupled in with the Apple warning, coupled in with those were the really two main reasons, to be honest with you. Okay, those were the two main reasons. The bond market was closed. There was no settlement of funds from Friday because of the bank holiday. And these things also exaggerated and enhanced the liquidity situation underneath the market. Forced margin sellouts that occur whenever we have a particular sector or multiple sectors that get hit. Today was a pretty broad-based sell-off. I mentioned that. I showed you guys at one point the New York Stock Exchange advanced decline line and AD line, and that was almost a 3-to-1 decliners to advancers. That's sharp. That certainly constitutes a wide-scale sell-off. So panic capitulation, if you want to call it. A lot of it is automatic. At stop losses are triggered, and of course there is a cascading effect. Then we had obviously that correspondingly pushes the VIX higher. Showed the VIX repeatedly since last week as to what the levels that the VIX might rise to. We had a fake out on the VIX when we look back at it, given the circumstances today. I don't know if it was a fake out or not, but there was a very sharp sell program on the VIX that came in late on Friday afternoon, if you guys remember. And we did very well on Friday on the long side, playing the reversal trades and, of course, the swing trades, which moved very nicely. So, and I did tell, if you go through my tweets, to pare down positions, buy some selective positions, of course. I was entering Apple at that time, and of course that got hit. I did buy some today, a bit, obviously in these circumstances, or any circumstances, you scale in, you don't dive in, and that's part of the position management and the trade management that is somebody like me who's been doing it for a long time, we generally tend to do, because we do know one thing. There are no exact perfect moments which you can buy the market. Yes, there are moments where you can get close to perfection, and we are basically at those moments right now. This is not the first time you're hearing this from me, as you know, and I will tell you that this time is no different. It's no different, okay? So that's why we rely on technicals, and we'll go through that in the next couple of minutes. We shall begin. I noticed a few things which are extremely... forgot to mention to you, one of the swing trades that we kept on buying, holding on, finally happened. We got our buyout, or in this particular case, Elliott Fund Management took Athena Health private. So that was a nice win. The calls we were trading, were recommending were the 125 calls on the Athena trade for a couple of weeks now, just rolling them out. And those November 16th 125 calls today paid the bills very nicely. Kindly take a look at it, even if you weren't in the position. They were up about 80-some%. In my case, my average cost was a little slightly less than $3, and they were sold at a north of $7. The stock was up $11.50. ATHN. Okay, so just want to mention that. So that trade is now out of the way. And you will find these sporadic situations, special situations, which I believe will also happen with Papa John's, PZZA. At some point, the stock was very strong today. I both common and cheap calls. That stock was up 3% today, up $1.54 at the close. At one point, it was much higher. In fact, it was it actually closed at the high of the day. That's nice, right? PZZA, take a look at it. Cheap calls, play them, boom. You wake up one morning, they get a nice unsolicited offer from one of the other bigger boys, and the next thing you know, they'll buy the stock out, they'll buy the company out between $60 and $65. That's PZZA. So these are special situations, And like I said, our life doesn't revolve around what Google is doing or Amazon's doing or Netflix is doing and Apple's doing. Obviously, the people who shorted those, and I'm sure some of our members did, congratulations to you guys, because you guys obviously made a killing today if you were short any of those particular names, NVIDIA included. So saying all that, Tesla was doing well overall, but there were lottos, and honestly speaking, those lottos were, my average cost is buck and change on the 390s, and they closed around 50 cents, little shy of that. It was doing fine till the end of the day, fine meaning relatively speaking, compared to the other, compared to what was happening on the tech side. But then came the news that they are having an emergency meeting, the Trump team, regarding auto tariffs. So obviously that was like another thing that happened, which pushed the market one leg lower, because if they go hog wild on the auto tariffs, trust me, the GMs and the Chryslers and the Fiats, and of course Tesla being an auto company too, is going to, pressures it, and it's going to go a bit lower. But the charts are put in place, and because they're lottos, it's not a dramatic killing fields, if you want to look at it that way. On the option side, they weren't $6, $7, $8 options, which collapsed. They were talking about a buck and change, and they're down to about 50, 60 cents, and now close the day at around 42 cents. These are the 390s. So that's another way that I do it, where I don't risk too much money, and just in case there is, there is the inevitable reflex bounce, those things can be sold at $2.5, $3, and you guys have seen that repeatedly happen over the past couple of weeks, over the past couple of months. Okay. On that note, let's go to the charts, because that's really, where the reality, where the truth lies, right? Like they say, traders lie and charts don't. So, and traders lie don't mean that they're always lying. It simply means we all have our opinions and direction, a cognitive bias on what we think will happen in the market. We want the market to go higher. We want the market to go lower. That's purely where we are biased by our positions on our book. And so obviously, our view of the world, our view of the markets are skewed. We all know that, right? We all know that. So saying all that, let's dive into the charts. Any questions here that I might answer based on some of the things that we talked about? Yes, no? Okay. All right.
Nope.
Okay. Sounds good. Thank you, Jack. Thank you, MB. So on that note, if you go back to my videos, which I highly recommend that people watch, because these are not just for fun. These are the things that I explain, things that I said, probabilities of what might happen. And when they do happen, it doesn't, you might not feel good a certain day, as I've said so many times, but at least you're prepared. You know what is happening. You have a framework. You have the map. You have the reconnaissance map where you're going to, how to protect yourself, how you're going to get the bad guys, right? That's just the way it goes. So this, what you're looking at here, is from the beginning of this is the 2018 chart, which I've shown several times. And this is where we are right now. I did mention very, very clearly that we would most probably get a inverse cup and handle. Well, lo and behold, we are getting it as we speak. And today. So what do we talk about in the inverse cup and handle? So keep this simple and keep it, just to the point. Let's get this color yellow. Here we have a major reversal on this candle when we slipped below the 200-day moving average. That was back on the 11th of October. Okay, so there's your left, there is your, and it's fully marked, there's your left shoulder. This is your left shoulder. Here is your very powerful reversal of the big macro channel, testing that 2600 level, slightly above that. That was around the 29th of October. That's your head. It was kind of interesting to hear one of the guys on Fast Money, and I catch it a little bit at the end of the day, talk about, one guy, obviously they're all lemmings. They either go super bearish or they get super bullish on the market. So one guy's like, oh, this market, blah, 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 just as standard stuff. And then one guy goes, well, you know what? Do you realize that there was an inverted head and shoulder? I'm like laughing. I'm like, we know that from days ago. We explained that this scenario might happen given the fact that we had a ferocious rally that majority of institutional as well as retail investors completely miss out. And please listen to my previous videos. I said something very clearly, that you'll get a second chance. And you are getting that second chance right now. It'll slip and slide, and we're going to talk about those levels where it's going to slip and slide. But you're getting a second chance if you missed out this first chance to make, like we say in New York, excuse my French, a shitload of money. All right? So if you missed that part for whatever reason, doesn't matter. This is your second chance. Only if you're prepared, only if you're ready to react, and there are no guarantees. There could be other black swans in the market, unquantifiable credit type of issues in global markets, which might surface and we could crash and burn all the way to 2600. But one step at a time. So you have a left shoulder right there at around this level, which I've already clearly marked for everyone's, view right there, 2711. This is exactly where we are. See how mechanical these charts are? So this is a right shoulder. There is a large downtrend line which we broke out of, on the 1st of November. The next day we had a very powerful move up, powerful move down, and then we ended with a, let me expand this. There you go. Clean this out, because this is the level that we're talking about, this pattern, right? And this pattern here is, let's put the number here. Perfect. 2890. Okay. So you have left shoulder. You have the right shoulder, which will very high probability will get retested tomorrow or might happen after hours. Okay. And I want that to happen where we retest to the dot. But here's the only thing that I know after trading for a long time. Not that long time, but I'm not been trading for like 30 years, right? Professionally, I've been trading since 2010, 2011, where I've been exclusively trading. Prior to that, I was crunching numbers, selling big $1 million, multi-million dollar portfolios to small pension funds and high net worth clients. That's like a tongue twister for me. So from a trading perspective, when we think exactly it's going to go there, you guys know better than I do. It never really exactly goes there, but close to it. So that's fine. So you have the right shoulder here. If we break this 2700 level, we got the 2775. Each of these lines are clearly marked. We will most probably retest 2675. And of course, if we break below 2675, then we have this. That's sort of the Armageddon scenario if we are positioned wrong, which we certainly won't be, because we'll be watching these things like a hawk and posting it in real time. And of course, you guys have to keep an eye on your side too. That's where you get that flush, which we could get a 600-700 point move lower. We don't know yet, so one step at a time. So at this point in time, so that's all it is. You got the left shoulder, you got the right shoulder, and you got the head. And that's what inverse head and shoulder looks like, right? Head, left shoulder, right shoulder, neckline. The neckline at this point, the first neckline is 2764 right there. That's why it's marked. It also happens to be the 200-day moving average. Very important, right? Now keep in mind, these are the E-minis, the futures, and we'll be looking at the SPX. So SPX will be a little less dynamic, similar numbers, 2764. Kept on showing that repeatedly. So we slice through it as we analyze this tonight. We slice through the 200-day moving average, just the way we did here. Everyone just, again, never bothered to buy these type of massive hammer reversals. And there was huge money to be made. And that wasn't that long ago. That was back in October. Okay, so as tactical traders, we want to take advantage of these opportunities, and we need to be prepared where the pullbacks might be. If I knew that today, if the charts, like I said, the fake out at the end of the day, there's a beautiful reversal on Friday towards the open. I mean, as we closed the day, we were down what 400 points, and then we were only down about 120, and then we ended the day in the last minute down 200. So again, as smart traders, we didn't just shove all our money into the market and said, okay, that's it. It's going to be one way train up, which it looked like last night, looked like early this morning with futures up 13, 14 points. But many of our trades worked out very well, as you guys all know. But regardless of that, you want to have selective, moderate positions or small, in this case, in this high volatile environment, small positions where you can enjoy the upside but not get completely creamed if it goes the other way or something happens at the open, which pretty much was the case today. So you have the first neckline here, 200-day moving average, and the big neckline, which is a massive resistance, is the retest of the 50-day moving average on the E-minis, and that's at 28.25. Unfortunately, today, investing.com, they were down for maintenance, and I could not pull up those charts. They're still down. So obviously, they had a server issue, so I could not show you guys my investing.com chart, and hopefully they'll be up tomorrow. Their system seems to be down. It says temporarily down for maintenance. Anyway, so this is where we are right now. If we break any of these levels, you can rest assured we will have further downside selling. But if we do hold, give or take, the left shoulder and the right shoulder, you will get a powerful bounce again. Fill in the blanks to retest the 200-day moving average, which right now is it's this line here. Let me move this right there. There's your 200-day moving average, and that is at 27.64. So just as a marker so people can read it easily, I put it like that, and right there, 2763.8. So there we are. We are certainly on a downtrend. There's no question about it. The downtrend's not broken unless we take out the 50-day moving average on the E-minis. But that's it. That's more of a longer-term downtrend, meaning, I'm trading the levels, as many of you are, and so that's where we are. Now, interesting, even after all this dropping, and this is all pure technical, just keep in mind that this line here, this pink magenta line here, which is the 150-day moving average, used extensively by many strategic hedge funds, is still trending higher, and is at 27.8648. It's very interesting. That's a 150-day moving average. The 200-day moving average is starting to curve lower because of what happened over the past 3 days after we had this monstrous move. So this was Thursday, this was Friday, this is today. This is right now. Futures are down about $1.25, 1.50. Not 125 points. So anyway, so this is where we are. So this is the level we got to watch out for. Just very clear. Nothing, no magic here. Approximately 27.10, 27.11, and we shall see. Now, saying all that, on the E-minis, one of the things that I'm missing here, and I don't know why, is I should have the McClellan. So here's something I want to explain to you guys. And like I said, we are looking, trading is a game of probabilities, right? Sounds like a broken record, but it is. It's a game of probabilities. It's not a game of certainty. So we look at the probabilities where we can make the money. As you know very well, that my discipline is extremely strong. It's, it's just like somebody in the armed forces. This is the battle, and you have to have your own discipline. So my discipline is that at any given time, regardless of market conditions, good or bad or ugly, I follow my charts. So sometimes it's a little bit, you get caught on the other side, but you follow the discipline and you try to interpret what you see in front of you. So on that note, one of the things that really stood out, and please look carefully, is the internal positive divergences that I talked about a couple of times. These are not things in my head. This is real, not fake. So let me show you what these internal divergences we're talking about. The last time we were here, was back on the 22nd. Look carefully right there. This was the 23rd, and also here, which was the 2nd of November. And this is where we are right now. When we were here exactly pretty much at this level where we are right now, which is approximately 27.27 on the E-minis, look carefully. This is where we were on the stochastics. And this is where we were on the McClellan oscillator. When we're here again around on November, beginning of November, here we were on the stochastics, and we were here on the McClellan oscillator. Overall, if you look at both of these lines here, despite the big dropping that we have taken over the market's taken, so the market indices in this particular case, the E-minis have taken since Thursday, Friday, Monday. Both the internal strength indicators, the full stochastics as well as the McClellan oscillator, is much higher than what they should be. Shouldn't they be down here at these levels? Because we are down at those, over the external charts are at these exact at the same pullback levels, yet the internals have a much higher low. That is a positive divergence, no question about it, purely from a technical standpoint. Does it guarantee anything? No. But does it tell us a little bit more about the internal health of the overall market? Internal health is pretty okay. I'm bullish biased, so obviously I have certain cognitive bias, which is on the bullish side, but more importantly, the technicals did not, the internals did not come down to the levels it should have been, given the fact that we are back at those levels. So that's a positive divergence. I hope I'm clear on that. And these things are important. I noticed them. And on top of that, it is a very, very defined inverted head and shoulder. Now let's take a look at the SPX. So here's your SPX, drawn to perfection. It really is. Okay? Remember, charts can be drawn to perfection along the way, how you navigate the trades and stuff. That includes me. That requires skill. That requires patience. That requires discipline. That requires a level of speculation. Because after all, trading options is speculation. Anyone who tells you that trading options is a safe walk in the park, I don't know what they're smoking. Okay? The big money in options, both on the long and short side, are made through taking risk. But it's a quantifiable risk because you know how much money you're putting in, and that's the most that you can lose in the worst case scenario. It's not like an endless move down. If you position size right, you can always use stop losses depending on your risk parameter. My risk tolerance is higher because I don't go hog wild on certain things, and then I press hard if it's going my way, and then I buy some of these ugly days where you could start to scale in. So again, this is 2018. This is the pure S&P 500. When I'm looking at this chart, this thing is talking to me like a disciplined tactical trader. I look at prices, of course they matter, but I also look at all the internals that go behind it. And maybe that's why at my stage of my life as a trader, I'm far ahead of the game than most people out there. And there's nothing, it didn't just come to me because I just woke up one day and said, oh, I'm just the greatest. No, I worked very hard for all of you. And I worked very hard to build my portfolio too. But I share everything. There's no magic secret here. There is a method to the madness. And there's a long time ago on Wall Street, I coined the term, which my boss loved, and which is true. And that is, you can be successful in the markets if you focus on the method and not the madness. All right? So there is a method to the madness. It's not just a random walk. And more importantly, now because the markets, as you know very well, I've said it many times, are so mechanical, so algorithmic, so defined in structure that you can actually see the structures before they happen. So those are the price levels and stuff that you can deal with. That's what we do here at Clueless Egg Trading, as you all know by now. Now, most of you have your own style. Certainly follow those, no question about it. All I ask people to do is simply use my charts and my analysis as a tool to further your own skill set, and you will see the difference that comes by. On that note, this is a fantastic tactical chart. Call it the algorithmic chart. Multiple things happening here, and you can see that clearly. So let's talk about what's happening here now. So what's happening here now is this, and I'm going to leave the whole. This is the start of 2nd of January, right there. Okay, this is where we are right now. We have again a very defined inverted head and shoulder. We got that big downtrend line. That downtrend line is approximately at 2,700, the round number, and we have a sharp reversal on the 9th of is it the 9th? Right there. 11th of October, right there, directly retesting the downtrend line. We played that like a fine violin. We did extremely well with that, and of course that was a big move up, 3-day move after pulling up, pulling back a little bit, and then just going hog wall straight to the top. And that top right now is a clear range, and the big neckline. I would say the neckline number 2. This is neckline 1. This is 2. So that's at 28.17. I said 28.20. If you guys all remember, of course you should. We went to 28.17. I mean, what more could you ask for? That's as good as, that's a bullseye shot. All right, right there on the mark. So saying all that, that's the past. We're talking about what is happening now. So what is happening now is your left shoulder right here at around 27.10, 27.09. So this is your right shoulder again. We are roughly about 26 points away from a direct kiss of the right shoulder. So that means we got another 100 to 150 points that we could drop at the open tomorrow morning. So I repeat that. We could drop anywhere from 100 to 150 points at the open tomorrow morning to mathematically satisfy the right shoulder. This is like a sniper calibrating his gun, right? So bottom line is that this is what we're doing. We are basically like snipers, and we're trying to figure out where the algos are going to come in, and how when the machines are going to kick in. So it's like a sniper, basically calibrating his scope, right? Some of you attending here know, obviously are well versed in that. So God bless you all. So so saying all that, this is where we are. Here's your head. And if we break below the 2700 line, we have multiple lines here. Each of these lines, when you look at my chart, you can look at it very clearly on a nice widescreen or iPhone, iPad, and the larger the screen, the better, obviously. So I mark it, I put the numbers in there so people can see it, and this number, so you see that 2693, 2709. The thicker white line, which is right here, is your 200-day average, which is right now resting at 2762. 2762. Now, after hours tonight, which really doesn't matter to us because we're not futures traders, it's going to be extremely volatile. Japanese markets opening down, Chinese markets will open, European markets will open at 4 in the morning. It's going to be a lot of stuff that happens. So the best case scenario would be that we retest all this and do all the dirty work, the dirty laundry out of the way before we open for business tomorrow morning. We have a bunch of big catalysts tomorrow. We have Fed speakers, very important, as you know. We need to know the tone of the Fed going forward. And we have Home Depot earnings, very important too, state of the U.S. economy. And so there's going to be a lot of stuff. And keep in mind that when you get these sell-offs, not the first time. How many times have we got these type of candles? 1, 2, 3, 4. I mean, you can countless times. And every time the retail emotional trader reaction is always the same, which is complete silence, despair, end of the world type of scenarios, and a complete lack of any involvement with trades. That's the overall trader action. So that never changes. I've seen this from my days as handling clients on Wall Street from back in 1996 period on. I saw it when I first started as a basically like a associate analyst at Putnam Investments, basically getting coffee from my boss and parking his car. It's always the same. So there's nothing to it. That's just a standard reaction. Human beings love to say, I'm going to change, I'm going to change. But most traders and human beings, as you guys know, never change their habits. It's very predictable. It's very predictable. So we rely on these charts, mix it with some of that behavioral finance stuff, and it works. It works. So this is what we are. And keep in mind, we are in a risky environment, no question about that. That's why we do selective trades. We're not going to be right on every single trade every single day. But boy, when we're right in the middle of the ugliest day, and you go and sell something that you bought at $2 all the way at $6 and $7, the Chipotles of the world, the Altas of the world, it's a pretty damn good feeling, right? So saying all that, so this is where we are. To break the 2700, we got 2675. That's a 100-point drop on the Dow. And if we lose this pivotal level, which is a support level here at 2675, it just automatically opens up the trapdoor to hit that 2625 level, which is also marked. Now, why are these marked? Because those were the points of reversal on the market from being a crash down to moving higher. And then, of course, the recent inverse head and shoulder confirmed bottom for now is 2602. Just want to be clear on that. So when I put up this chart, you should be able to read it loud and clear. You should just look at it, you read it right there. Okay? This is what's going on. So the perfect scenario would be a slippage down, a move up to touch the 200-day moving average, which is not a static average, so it's going to move slightly, meaning like it will be adjusted, calibrated a little bit off, a little bit tomorrow, but somewhere around 2760, 2762, and that if the market does jump 60 points from the 2700, give or take 2700 level, that's a 400-point move that you're going to make money off. It's not rocket science, guys, all right? I'm showing this repeatedly, showing it again. The more you guys see it, the more you follow some of these tactical charts, use your own discipline, your own skill sets, you're going to be fine. Or at least you're going to be happy. You're going to scalp. And intraday, if I see breakdowns, we scalp the puts. Some of us here, members attending here on this webinar, do fantastic. They take 30, 40, 50, 60% of these. In this particular case today, the puts were the 275.5 puts. I even put prices down. Approximate prices down. You guys see that. At around 69.70 cents, they went to $3.41. I wasn't there at $3.41. I sold at double, around $1.50, two and change, and close to $3. The final set that went down, the final sell-off, I wasn't there for that extra 10, 15% move. But the 275.5s were fantastic. Net from the point that they started the day, I didn't recommend it started the day. As my levels broke, that's when I recommended. They went from 24 cents on the low, that was at the open when we were higher, to 341. So you're talking almost 600% plus. But from the time that I recommended it, you could have gotten a neat 400 or 380% plus from the 69.70 cent level. Certainly feel free to do that. And these charts are there for you to react without me having to even say anything. So this is where we are. Head, left shoulder, right shoulder, and we shall see. We want to see the reaction at these levels, what the market does, and then if it breaks, you want to go short. If it starts to bounce, you want to go long. That's it. There's really nothing to it. Now again, the thing that looking underneath the surface, underneath the hood, if you want to look at it that way, we have major positive divergences. This is really interesting. Caught my eye. Okay? Because the last time we were here, this is what the stochastics were. Last time we were here, this is what the stochastics were. We are back here again. Look at this. We are here, back at these levels, and look where we are. What's that telling you? at least on a technical basis, purely on a technical basis, telling you there's a lot of underlying strength still in the market, regardless of the price action on the front side and what happened to Apple and Apple suppliers, which spread across the board and forced margin selling on other techs. Same thing with the McClellan oscillator. So if it starts to crumble down, we lose the 2700 level, you're going to see the stochastics break below that, and you obviously want to be on the short side. Okay, I'm clear on that? Good. Simple stuff, very, very effective. Very effective. So that's the daily chart. Unfortunately, I can't show you a lot of the shorter term charts because investing.com, the server is down for maintenance. Not mine, their server. Next one we're going to look at is your, bear with me. Yes, SPX, the SPYs. Okay, just type it in here. So here we are on the SPYs. Again, the same story here. If you want to be very specific on support level, would be 270.3 right there. 270.3 between 270.51 and 271. We are starting, again, we have positive divergence, but it's starting to cross over down. It's starting to happen. So we've got to keep that in mind. We got to keep that in mind. Let's look at it on a more shorter term basis and where we are on, let's say, the 1 hour chart. And this is what is exciting on a short term basis, meaning what we can do within the next 24 to 48 hours to make money. These big 300-point quick reflex bounces that can last for a bunch of hours during the day. I participate in them, and they pay a lot of bills. So you guys should take advantage of that too, instead of waiting for some nirvana perfect moment to enter the market. Like we see a lot. People just sitting around for what? I don't know. So bottom line is, play with a little bit of money. Put $100 in, $200 in a SPY call, and boom, just go hog wild. You take out like double that. So here is what's exciting. On a 1 hour chart, we have the McClellan oscillator go as low as 400, minus 450, and close the day at minus 420. That's a lot. So basically, this is a 1 hour chart. So don't expect this to suddenly turn around and go to 285, but you could very well get, a 2 to 3 point move on this, which you can scalp. That's deep, deep, deep oversold. The minus 400 level. You get overbought up here at 633, look in the right hand corner, at 400. And so now we are at minus 420. So when you look at the chart here, if you get a reversal bounce off this level, then you should be able to scalp out, probably 60-70% on an intraday call real fast. Now keep in mind, I don't control the markets, neither do you guys. So if you do not have the time or the energy to look at the charts or trade this, then just do not trade right now. That's just the nature of the beast. The biggest money is made during heavy volatility. If you think it's a one-way bet to the end of the world, the same old song and dance that we hear, because there's a certain section of the financial community and the short crowd who just do not want President Trump's economic policies to succeed. We know that. All they're going to talk about is the bad stuff. And there's really no real bad stuff going on other than big uncertainty on the Chinese trade tariff side and some of the other things that we talked about earlier. Okay? So all they want to do is talk their book, get super negative, keep mom and pop completely in a state of terrified silence, so they never make money, whether the market bounces 1,500 points or 1,700 points. They're never there. They do not want to ever look at the stock market, and they do not want the United States of America to succeed as a prosperous, successful country. It's a fact. They always talk about the negatives. Well, I unfortunately am not in that camp. All right? And I know very well. And it's not a political thing. This is a kind of an economic political thing. It's where these guys, this group, they just want to go ahead and just keep on bad-mouthing all the crap. Keep traders, smart people, and mom and pop, the average American family, completely out of the U.S. stock markets, because the U.S. stock market is one of the pillars of U.S. economic and military strength, right? If we're weak, our military would be weak. If our stock markets are completely in the gutter, we would be weak as a country. You understand what I'm saying? Believe me, I know these things, all right? So they have a hidden agenda to keep on doing that, make money on the short side. There's nothing wrong to short. But to constantly talk about falling into a deep, dark bear market when there are no indications of anything like that happening, it's just a tariff. It's evil. And I've seen that happen a lot of times. Yet the market turns around, stands on its footing, moves along. But you hear the chorus of negativity that comes out from majority of these people. It's so I say, screw them, trade the charts, move along, and then we decide what happens. On that note, let's take a look at the weekly. This is the weekly chart of the S&P 500. I'm sorry, the SPYs, and here is the story. Here is the story. We still have an inside day. This is what happened, guys, okay? Just in case, many of you forgot, because many of you did not participate on that move up. From the 29th of October, we went powerful. We went and almost kissed the 20-week moving average. That's the 20-week moving average, the blue line here. We went past the 50-week moving average, which is this red line. 34-week moving average, the orange line. And then this happened today. We are still within the body of the previous week. So that's called an inside candle. This is the SPY. This is today. Can anyone tell me what they notice here, please? Please. Can anyone answer what is significant here and today?
The stochastics crossing up?
I said here. This one.
Oh,
the volume column.
Low volume.
No volume almost. Exactly. MB. Absolutely no. I mean, look at this. So today, whichever way you slice it or dice it, and these are actively trading units, right? These are SPYs. There was literally no volume. Number one, because the bond market was off. Banks were, banks were closed. So bank traders couldn't trade because banks have prop trading desks too. And there was no volume. And all this happened on extremely light volume. So this is how a bear, somebody who's got a bearish bent, and remember, we need both bears and bulls to make a market, right? So they would say, oh, look at that, low volume just happened. Imagine if the volume was really high. So, okay, great. A bull would say that, hey, look at this. We fell at one point almost 700 points. And by the way, how much were we up in the morning? I think we were up, I forget, because it was such a fast-moving day. And but anyway, so 700 points, we were down almost 700 points. So bottom line is, on this much volume? Come on. So a bull would just rush it away and say, screw it. I need volume confirmation to tell me that we are going a lot lower. Does everyone understand what I just said? Yes?
Yes, I do.
Okay, good. And I hope everyone's getting it like MB's getting it. Next time I'm going to have her teach the webinar, I was a little bit sleepy. I actually took a nap. So anyway, so overall, it was pretty much a low volume, high price sell-off. Okay. Candle wise, we are still within the body of this candle. This is where we turned. That was the last demand point, or where the buyers came in hard. That was the 8th of October. That's at 270.58. We could very well go back and retest that. I mentioned that before. So keep an eye on that. Low volume. The other thing that MB, which you noticed right away, is the crossover up. Remember, this is a weekly chart. This is showing us what's going to go as we go into monthly options expiration on Friday, and we go into Thanksgiving. Going out. So this is still very positive. So if we closed our eyes and said, wow, this could be a very powerful tactical buying opportunity because nothing changed on the weekly charts. So that is something you got to keep in mind. It's not always about the 1 hour, the 5 minutes, the 15 minutes. So got to mix it all in, and I do. So here we are, and this is what happened before the market took off big time back in March, April thing, and look what it did. Through all this volatility, the weekly stows kept on moving higher. It's the same type of scenario that's unfolding right now. And I believe President Trump is going to have some pretty strategic talks with Premier Xi. What the heck do I know? But still, I don't think he's going out there to slap Premier Xi. I think they're going to have a pretty friendly communique. And I think, let's see what happens. Can't really predict those things. But I think overall, he's not going to go on a demolition derby against the Chinese premier at the G20 summit, Leaders Summit in Argentina. So we talked about that on the last webinar. So on the weekly, it's pretty good. Let's take a look at the McClellan oscillator. This is what excites me as a contrarian trader. Look, everyone says, oh, I'm a contrarian, No. Most people are not contrarian. They just like to follow. They like to just follow the prices. And that's okay. It's not okay because their P&L never really grows. They never catch the big moves. And they miss out those huge opportunities. So when you look at this McClellan oscillator, guys, I mean, this is sexy. I don't know, how about that? How about I say that word, okay? So it's minus 255, for God's sake. A price-watching trader or somebody with a large bearish bent will say, oh, it's minus 255. That's really horrible. I said, I know that. So that's why the prices are reflecting that. In many cases, unjustifiably. In some cases, justifiably. Other thing to keep in mind, if everyone noticed, and our friend and fellow trader Bob had mentioned last week, November 15th is a big day for hedge funds because that's the day they'll find out how many of their clients are going to liquidate, right? So here's my bent on it. We already know it's going to be November 15th. I even put out, by the way, the article on that. November 15th, it says Hedge Fund Reckoning Day, right? Every year it's the same story, by the way. So bottom line is that so far, if you read through the article, you'll see it, that you don't think the hedge funds are preparing for it by liquidating some of the positions? You don't think that's part of the reason why so many of the big cap, powerful techs, great companies with great growth rates are being sold off? Of course, they're preparing for it. This is part and parcel of that preparation process to sell portions of their portfolio. And that's the reason why I've kind of shied away from tech over the last 48 hours. If you notice, a lot of my selective trades went gangbusters higher today, and they were nothing to do with tech. So you don't think the hedge funds, guys, are liquidating some of their positions to keep cash on the side just in case they get their estimates on the redemptions from some of their big shot clients are going to be larger than expected? Of course they are. That's part of the pressure in the market. You think they're waiting around till November 15th, till the last minute to say, oh yeah, I just got Mr. Joe Schmo, big Joe Schmo, right? Some billionaire saying, okay, I want to take out my 200 million out. They already are preparing for it. That's the reason for part of this market drop. And the lovely red coloring on the tech side, which are owned in many cases quite heavily by many different hedge funds. Right? So it's not like they're waiting till the last minute, till Thursday night, like, okay, I'm waiting. Okay, oh, here comes the sell. Here comes, he wants to take his money out. Okay, hit the sell button. No, they've already done that. I'm not saying they're finished doing with it, but in other words, sell the rumor, by the news. Let it come to us. So just hope you guys understand that. So November 15th is very important. And remember, middle of the month, it's not the first time I've said this. You always get that big volatility. Middle of the month, guys, right? 15th, plus minus 2 or 3 days. So what day is the 15th? My son's birthday is on the 14th. God bless him. So you got 15th, which is a Thursday. So plus minus 2 days in and around the 15th is today and going into next Monday. It's not like you get 5 days of consistent selling, but I'm just saying that's where the volatility structure, the volatility cluster is clustered within those dates. So just keep that in mind. So the weekly is looking pretty good. I actually love the fact that the volume was so light. A heavy volume sell-off would not necessarily be good. Now, it doesn't mean the volume's not going to rise tomorrow because banks are going to be open, the bond market's going to be open. Okay, next, I want to show you the good old McClellan oscillator. All right, so this is where we are, the McClellan oscillator. And this is pretty damn good too. This is where I pleaded, screamed, shouted, in a nice way, obviously, to all of you, buy, please buy something. Some did, many didn't. Well, too late. Buy. You see minus 66, minus 118, you inevitably get the bounce. It's just a technical thing. Forget about this over-analysis paralysis, Like they say, let's keep it simple, stupid. Let's keep it tactical, stupid, Let's call it KITS, K-I-T-S. So make that up. So this is what happened. And monster move. We went from being down minus 97 beginning of October, mid-October to plus 75. So the bears who missed this humongous run, which could have generated from 400 to 600 to 1,000 plus type of returns within a matter of days, they will always ponder upon the negative. Didn't I tell you the market's going to pull back? And I say, goddamn idiot. Of course we knew the market was going to pull back because we were at 75. Way up. Overshot. We overshot here. On the McClellan, we overshot there. So what's so special about telling me that the market's going to pull back? I even said last week that the market would most probably have pull out, do the inverse head and shoulder and pull back. Simple terms. But they all come out of the woodwork like, oh, I told you. So, I'm so sick and tired of that. You know what I'm saying? It's just always the same old story. If I wasn't that seasoned, if I hadn't gone through so many different market cycles, I would think, oh, wow, these guys are really smart. None of us are really smart. Some are just smarter than others, okay? How about that? But to hear the same old song and dance about, oh, I told you so, the markets are now finished, it's just idiotic. It's okay. You want to talk your book because you're in a short position. Maybe you put a lot in the short, so you want the market to go down, and that's fine. But don't make that internal truth. It's like the fake news out there from different sources. They want to make it sound like it's so real, right? It's the same thing with the markets. So we already know when we go to 75 on the McClellan oscillator, you're going to pull back. And we had a beautiful pullback. Seriously, we did. And this is where we pulled back here, right there. Now, if you notice one thing, so this is where we pulled back. We got overbought, and now we're starting to ease back. It's not the end of the world. Now, further deterioration, we already know what to do. If we break the 2700, 2690 level, 2795 level, we're going to go lower. Not the end of the world. So this is pretty much what happened today. So there's really nothing new. Are we going to suddenly plunge back into minus 63? It could happen. All I know, you see the P here? That's your pivot. That's at minus 30, minus 29.72. Pure technical stuff, guys, all right? So the McClellan could very easily, from where it closed at today, 9.80, go to 29.72 on another 200 to 300 point drop. Now, in simple terms, if you really think about it, we have dropped about 1,000 points overall from top to bottom in the past 72 hours. We have dropped 1,000 points, guys, on the Dow Jones Industrial Average, or somewhere around there. So simple. Forget about technical stuff. Forget about anything. You drop 1,000 points, you take a little pause, and you might get a 300 point bounce. Play it. Play it. There's a lot of risk on the short side. There's a lot of risk on the long side. The only difference is, can somebody tell me what? We already know what the risk is on the long side. We already know what the negative things that are ailing the market. But you know what the danger is? The shorts can never, the dogmatic shorts, I should say, not the tactical shorts and bets. They can imagine anything good happening. They just want the Trump business agenda just to completely collapse. They do. They think he's going to completely screw up at G20. He's going to completely screw up on the auto tariffs talk. They think that's it. Remember one thing. We have democracy, elections, Democrats got the congressional house. Great. So we have a gridlock situation. Wall Street loves gridlock. That's it. But they can't change anything. They can't roll back the other stuff because that's been, those are all set for now. So saying all that, this is where we are in the McClellan oscillator. We got very overbought and we pulled back. We're going to be watching this very carefully. And even if we slip and slide a little bit, I'll be showing it to you guys, at least posting it at the end of the night or the following morning. Keep an eye on it. If for some reason we get this massive collapse back to minus 97, minus 100, minus 118, minus 66, this time, for God's sakes, you guys know what to do. It doesn't matter if it's going to happen in the next 3 hours or 4 hours. It'll happen within the next 1 to 2 days. You get massive reflex rallies. So please don't miss out this time. If you want, sit out in cash and see what happens. Let it fall. Do a little shorts intraday. Don't go to bed with big amounts of shorts. Puts. I'm telling you right now, not of these levels. Because you might wake up, not feeling too good. Or feeling very good if futures open down 20 points. You better take those profits like right off the bat, right? It's the same thing. So there's your McClellan oscillator. Any quick questions on this? Deep oversold, very overbought, pull back to neutral right now. That's what the market is. Thank you. Okay. Next thing we're going to look at, and these things are helpful, is your swing 533. Okay, the SPX 533. So here we have the same type of story. We got deep oversold. It took a while. There was a positive divergence. Markets were falling, but the internals were rising on the MACD, on the SPX 533. So basically, at this point, you went from, so it shot up, got overbought. Now we're easing back a little bit. Nothing that is too alarming. We pulled back. I don't trade off this. I look at it as a directional indicator, 2650 on the low end. On the upper end, the Bollinger, I believe right now is at, trying to find another line. It's somewhere around here, around 2850. More importantly, this is still, the MACD histograms are still showing positive, and this is what I like. This is what I'm focusing on, because on each instance, you got to focus on a certain indicator, which is giving you the most relevant information. The RSI went from being very overbought, because of that sharp move up, to very oversold in 48 to 72 hours. We are back down towards the 10 range. This certainly can slip and slide a little bit more, no question about it. We already talked about those scenarios, but so far it's mixed signals. But again, you can clearly see the formation of the head and shoulder. Head, left shoulder, right shoulder. So I think that's pretty much sums it up. I can't really show you the investing.com charts because those are, let's see if they're up. No, the servers seem like they're still down, because those would give us another view into the picture. But so far, here, the key thing is, before I wrap this up, keep your trades a little bit, obviously on the smaller side. If you want to hit the gas to the pedal, metal to the pedal, pedal to the metal, then you got to play those sharp candles. But in that case, you got to have your eyes glued to the screens. Things happen very quickly, as we know. Futures right now are up about half a point, which means nothing for tomorrow. We have a turbulent week, just like any other week. We have a turbulent week. We are not completely oversold. I keep an eye on my quad charts, the algo HFT charts. Those are also consistently showing 270.41 as a right shoulder on the SPY. On the S&P, the same story. The right shoulder is at 27.06. I'm seeing the fast stochastics on my other screen getting, very oversold. The slow stochastics are starting to curl down, and obviously that's the one that I am keeping an eye on. So that's the clearest signal. We break this level, you want to short hard, but it's going to be quick, right? It's going to be quick, and so whatever drop is going to be very, very quick. But if this holds, the shorts will cover. Institutional shorts will cover, and you're going to get a quick 200-300 point rally again to retest the underbelly of the 200-day moving average. Retest the 200-day moving average. It is standard procedure. 200-day moving average is right there. That's the magnet. If it gets up there, fails again, we'll see. Remember, this downtrend, if somebody is looking at it from like, oh, when is this downtrend going to end? Well, this is a very defined trend. The downtrend line is above this neckline. That's over 28.25. Now, this Apple thing is something that I scratched my head on. Lumentum never mentioned Apple. Apple didn't make a single comment. We don't know if, they said a very large customer. Everyone assumed it's Apple. Because Lumentum, LITE, was down 32% today. The stock got smashed. LITE, take a look at it. They make the 3D laser displays or something, all the fancy stuff that we use on our iPhone. So the key is that caused the earthquake, the tsunami on the chip supplier side. I always scratch my head because I'm like, I think a little bit out there. Not a conspiracy style. I'm not a conspiracy geek, okay? So put the facts in. What if it's not fully coming out of Apple? Do you know what's going to happen? Do you ever think of that? They smashed Apple today, down $12. By the way, Apple, oh, that's the last chart I need to show you guys. Apple is at, and I showed it to you guys earlier. Apple, so just finish my thought. So if for some reason Apple makes a comment, which they don't like doing too often, that their business is fine. By the way, iPhone was the hottest selling thing on Alibaba's craziest singles day sale. They said one of the hottest items, the largest share of one of the biggest sellers was Apple iPhones. How do you like that? Not Samsungs, not Xiaomi or Zhouxi, whatever those other phones are. Apple iPhones. All right, on the Alibaba thing. Alibaba's numbers were sick, at least from its sales standpoint. Like, what was it? Like 31 billion in one day? What are they selling in Mars? I've never bought from Alibaba. I don't know. What's their marketplace like? It's serious stuff, obviously. But 31 billion in one day? Like, holy cow. So anyway, so coming back to this, before I don't want to come back and revisit this, is the downtrend, overall downtrend doesn't break till we break out over the 50-day moving average. This pattern, one more the other, in my opinion, just from a pattern standpoint, just because I've seen it so many times, not to say it's going to happen this time, but there's a high probability it will. This pattern will get completed. In between, they'll take the scenic route all the way down here, possibly. Who knows? We might create a massive double bottom. I don't know. If the lines break, we're going to do that. I'm ready for it. But this pattern should, because this is if the market wants to end on a very high note for the year, it'll end here at 28.91. Okay? That was the high for the year. I don't think the market ends there. On a very bullish note, if we end 2018, we're going to end, in my opinion, around the 2900 level and 2890 level on the E-minis. So let's take a look at Apple, because that was the main cause of a lot of the distress in the markets today. I showed this earlier on, showing this to you guys again. This is all technical. No feelings required. Here's a gap. This is the gap from the 31st of July. We played this gap. This was an earnings gap up. I think. I can't remember. Charts are very defined. Apple's at the 200-day moving average right there. This line, that's at 193.32. Slip and slide below the 200-day is normal procedure. That brings us to this line here, which is a major support. I'll make this really thick so everyone can see it right there. And that is 189.07. So if Apple drops another 5 points, that's going to take the market down another 300 or so points, 300, 400 points, have us test the 2,700 level. More than that, we would go to 2650 to 2670 on the S&P if Apple falls to 189. Because Apple's such a big weighting on the market, right? You want to, it's a screaming buy for a quick trade. It's a screaming buy. Remember, and this is one of the sessions I'm going to cover, but mostly for my ACS students, I'm going to cover that you can do a lot of fast scalp trades during the day. It doesn't matter how fugly the market is on the outside. You can do reversal trades. You can do scalp trades for a point or two. You do it with a decent sum of money. You're going to come out nicely green at the end of the day. And it's not like, it's not rocket science. You just got to trade the 15-minute charts, the 5-minute charts, sometimes the 1-hour charts. And you just scalp it. You do fine. Seriously. Is it easy? No. On a really fast-moving market, it's not easy. On a market which is really oversold, it's easier. So anyway, so this is Apple. Here's the gap, 191.53. Here's your 50-day 200-day moving average, 193.32. We're almost there. Is it possible that Apple bounces from there for a couple of points to around 203? Believe me, Apple lost its 150-day moving average. Technically, that's not good, but that also means that it might come back and retest that 259 right there. See that number? 200.67? That was Apple today. So if you're going to trade it as an active trader, forget about whether Apple's a dying company and all that garbage that you hear, right? So you can trade it for 4, 5, 6 points. We did it last week, bunch of times. Okay, so this is a major gap. The lower end of the gap is 191, so you got another 3 more points to go. But expect Apple to have some sort of reflex bounce from this zone. In the meantime, if you want to short it below the 200-day, you can do it. Only thing is you got to be fast, because the machines will pick up Apple so fast at the lower gap, which is around 191.76, 191.50, your head's going to spin. It's going to be one of those big sudden buy programs that come in. And more importantly, you think Apple's just sitting around there and Mr. Buffett is just sitting there? They're going to trigger their buybacks in stages, and it can be huge. And when the buyback programs come in, you know how it goes. So just keep that in mind. This other thing that I noticed about Apple from a pure technical standpoint, again, a positive divergence. The last time we were down here on the stochastics, Apple was at 203. So we went lower, yet the internal stayed higher. Same thing with the McClellan oscillator. Same thing that you see on the front end on the market. So ladies and gentlemen, thank you for attending. I think I covered some of my thoughts on this process here. Selective positions, which are special situations like Pizza Hut, like Chipotle, like Ulta, like Crocs, like Etsy, things like that. Definitely take advantage of those things. Selective positions where the options are cheap, you keep rolling them out, then it happens, like Athena Health. We have another selective position in play right now, which is AKBA. Cheap calls. They're all less than $1. You just keep on rolling them. And then, and if the charts cooperate from the low end, because that's where AKBA, the biotech is coming from a very low end, make a lot of money. So that's it. Definitely stop by the chat room if you guys have time. And I'm always there to answer questions. And like I said, there was some serious technical damage that was done to the market on very low volume. Doesn't matter. There was still technical damage. But our job at Clueless Day Trading is to try to take advantage in between and not make some grand call whether the market's going to make a new all-time high or a new all-time low. We're just trying to play the tactical ranges to make as much money as possible, which reminds me, for active traders, this Tillery is acting really well. I've been showing the charts all day. I traded it 2 or 3 times, small amounts, back and forth. Still have it a little bit. That is something to certainly take advantage of, because that stock has such a high short position. It has such high volatility. It moves 6, 7, 8, 9, 10, 14 points within minutes. So certainly don't let go of it. Be a trader. Don't be a massive long-term investor at this situation. And again, hope the charts that I'm showing are helps. And in the meantime, go with your own gut feeling. You know, certainly use my charts and your own feelings and hit it. Put your ideas out there, and I certainly put member suggestions out there, as you know I do, so other people can also look at it and participate if they'd like. And thank you for attending, guys. All right. Somebody said Tillery earnings tomorrow PM. That's right. Good. So that's going to be one heck of a volatile thing. We made very good money on Tillery last week, as you know. It just exploded right after I think, and I think I'll participate on the earnings Tillery with a small amount of money on the long side. You know why? Because everybody thinks it's going to go down. But pot fumes, last I checked, I don't do that stuff, okay, rises higher. Just kidding. The charts look pretty good. On that note, God bless you all. Thank you for attending. Hope you guys had a restful day for people who didn't have work. Happy Veterans Day. God bless you all. And see you guys tomorrow. Have a great night. Thank you, Jack.
Thanks, Frank. Have a good night.
Thank you, MB. Thanks, hon.